Now, what do you see out that foggy windshield?
Well, I think, and this is just a guess, is that the Fed is thinking about changing its position on interest rates and its lax monetary policy, because I think they're starting to feel that inflation might be on the way more than they have in the past.
Maybe they've been watching us.
Maybe they've been watching us, yeah.
We've been talking about it for a little bit here.
Well, you know, the unemployment numbers, which we just talked about, are getting a little bit better. They're certainly heading in the right direction. And the bond market is signaling, you know, interest rates should be moving up.
Well, the 2-year Treasury is up just in the last 6 months. It's gone up to 0.8% from a 3.2%. So that's a pretty quick move. It's more than doubled in its yield.
Well, it's been jumping around a little bit, but definitely the trend is upward in interest rates. And so that's an issue with inflation. And then, of course, like corn and commodity prices are skyrocketing. Corn...
Limit up yesterday.
Limit up in corn. So, you know, they can only move so fast in a day, so they don't have such dramatic price spikes. When you get limit up in any commodity, it's something to note.
It means everyone's buying.
Everyone's buying. And, you know, the world food costs are surging, but they're not quite so bad because rice has been fairly benign.
Rice feeds the world.
But I also heard, and this was a report I heard through Bloomberg, that the rice crop from Thailand, which is a major exporter of rice, they're thinking about, they do 3 rice crops a year, they're thinking about cutting it back to 2.
Oh, so that's going to pull back on supply.
Well, that goes back on supply, which means prices
prices
rise. So, you know, that's you know, very inflationary. So, and the way to stop inflation is to raise interest rates and slow the economy down, which is obviously not good for a lot of people.
But can we really take away all the stimulus?
Well, that's the question. You know, the Fed's been stimulating the economy. Fiscal policy's been stimulating the economy. We've been spending way more money than we take in through taxes. Unemployment insurance has gone from whatever it was, 13 weeks to 99 weeks. That's running out. We're going to take that away. State budgets. We had the fight in Wisconsin. We're about to have a huge fight in California sooner or later. We can hardly wait for that one. And they're hitting other states as well, of course. Consumer prices are going up. Walmart just said their prices are going up. They don't have any choice. Higher interest rates are, you know, kind of lurking around out there. And so can we keep the recovery going given this headwind? So we're kind of at a crucial juncture of whether we're going to make the leap to a normal economy, or that all the stimulus got us to this point and then they pull the stimulus away and they're pulling the rug out from underneath us.
So Mama Bird's going to see if this baby bird can fly.
That's good. Exactly.
Start flapping your wings,
we're
people.
We're going to start flying. Well, start flying, people. Yeah, that's it.
Well, what's your takeaway?
So the takeaway is we're at a crucial juncture. If the economy is self-sustaining, we could make it through to a normal situation. I hope it is, because if a double dip happens, it's going to be really painful.